Good morning and welcome to a new edition of Merrill's Monday Morning Market Madness. Talking to you today about the Phoenix residential housing market and how July went. I like to try to do these on the first Monday of the month and talk to you about the previous month and how it performed compared to expectations and what we see moving forward. Obviously, we had a kind of a crazy July, in the world, everything happening politically and economically. And to be honest, I was quite pleased reviewing the numbers this morning with how resilient the Phoenix housing market seems to have done. We did see a little bit of a dip in pricing and in pendings, but overall not, excuse me. Overall, not quite as bad as I might have thought. I do have normally I like to stand up and write these numbers up on the whiteboard, but I apologize. I just had a surgery the other day and still feeling a little weak. So I'm going to sit down for today and share a spreadsheet with y'all instead. So let me just share my screen with you here really quick, and I will show you what the data is, share with you what the data is showing us. So let's see here. There we are. My current window. There we go. All right. Okay. Whoa, sorry, that looked a little crazy. Okay, hopefully you are seeing now this spreadsheet that I put together. So, sorry, I know there's a lot of data. Please just try to ignore all that stuff down there, and we'll just talk first. We'll start up here. So I'd like to start, as always. We currently have 17,705 active listings, 6,960 pending listings, 5,730 that have closed in the past 30 days, giving us a month supply of inventory of 3.09. If you compare that to the first Monday in July, we were at 17,988 active listings. And if you watched any of my previous content, I was concerned because that number just kept going up and up and up. All year we've been seeing the total number of active listings just continue to climb. And I mentioned, if this trend continues, eventually we will get to the point where inventory outpaces demand significantly enough that we will see a drop in home values. But interestingly, inventory for the first time this year actually declined, not significantly. In other words, it pretty much held stable, but we went from 17,988 down to 17,705. The total number of pending listings dipped slightly from 7,300 down to roughly 7,000. And the number of listings that closed over the previous 30-day period also dipped slightly. The month supply of inventory rising slightly despite inventory staying stable. But more importantly, I kind of wanted to look at, how did the numbers that we had in July compare to last month? So again, in July, we sold 6,205 homes. I'm sorry, that's just residential dwellings of all kind, not just single family homes. And compare that to June, there were 6,324. So we basically sold roughly the same number of units, down 1.92%. The more concerning number was the average price. In June, the average sales price was $592,000. In July, it was $567,000. That's a pretty significant month-over-month drop. When I see that big of a drop, I usually like to look and see, was there, a statistical anomaly? And sometimes when there's a really high-end home or a really low-end home, or a bunch of really high-end or really low-end sales, it can skew the average. So I like to look at the median, where it kind of, when you look at the median instead of the average, the median kind of discounts the outliers a little bit better. And even the median price dropped it was in June 450 and it dropped to 437. So we did see a dip as well in the median price from June to July. Days on market was roughly the same, and the sales to list price ratio was also roughly the same. And then if we compare July of this year to July of last year, we actually saw an increase. So we sold, an extra 300 homes roughly, or an extra 4.66%. The average sales price increased 1.5% from last July. The days on market was a little higher, from 56 days to 63 days. and the sales to list price ratio decreased by 1%. So really extremely similar numbers to what we saw in July of 2023. And then same thing if we go back to July of 2022. Now, 2022, it was that was by July, rates had really increased. We'd seen the market really start to slow down, but it was also kind of coming out of COVID, and there was still a bit of a frenzy going on. So interestingly, in July of 2024, same thing, we actually saw an increase in the number of units, but barely. So roughly the same number of homes selling, an increase in the average sales price, up 3.48% over the past 2 years, which of course is less than inflation. But the biggest difference really was just days on market, going from 33 days in July of 2022 up to 63 days in July of this year. And then lastly, if we go back all the way to July of 2021, of course, this was when rates were, roughly 3% and the market was going crazy. We saw 9,142 homes sell. So, a drop of 47% in the number of units. But again, average sales price over the past 3 years up 12.1%. And then the days on market, of course, at that time was only 27, now 63. And the sales to list price ratio, homes were selling for full price, often many times way above full price, and now selling a little bit below. But overall, I've got to say, I'm quite surprised. I feel that the market was more resilient than I would have expected it to be. Yes, that little bit of a dip in the median and the average sales price is the only number that's slightly concerning, but the fact that inventory actually decreased, and the fact that some of those other numbers we're still seeing, overall year over year an increase in prices. And days on market at 63 days is still really conservative. Month supply of inventory just barely over 3 is also still very, very stable. Now, looking ahead, of course, don't have a crystal ball here, but just kind of what the data says, rates, if you haven't heard, drops to pretty much the lowest they've been at in over a year, down to a 6.4% on a 30-year fixed rate mortgage conventional, which is still, of course, higher than we would all like it to be, but a great improvement, and speculation that those rates will continue to improve. The Fed, has been indicating that they will most likely be dropping interest rates at their next meeting in September. However, I would not expect a major change to happen in mortgage interest rates after that meeting. What tends to happen is the bond market and the speculation, when people believe the Fed is going to, when investors believe the Fed is going to drop the rate, it will react ahead of time. And I think that's a big part of why rates came down so much. And then, the bond market, honestly, it's complex and there's a lot of moving parts and it's not just one thing to look at, but rates are a really good point right now, combined with the fact that buyer demand is a little sluggish and will probably continue to be sluggish, frankly, through the rest of the year. The election cycle and all these other factors. But we've seen a lot of really great data coming out pointing to the fact that, looking at previous elections, darn it, I actually have a couple of cool slides on this that I had not planned on sharing ahead of time, but let me see if I can get one of them pulled up here really quickly. But looking at previous elections, we actually saw home prices tend to rise. In the number of homes selling after an election tends to rise. The average prices in homes tends to rise after a presidential election. Interest rates tend to improve after a presidential election. So I'm feeling more optimistic this month, given that inventory really leveled out this month compared to last month. And as long as inventory stays stable, I think that we will see home prices remain stable as well. If we see inventory really, really skyrocket here in the fall, then buyers will, of course, have more leverage. And then when they have more leverage, it gives them more negotiation power. So we'll continue to keep an eye on it and keep you updated as things progress there. But like I said, overall, really pleased with how resilient the market is remaining. And if it, like I said, if inventory stays in this, under 18,000 active listings, heck, even probably under 20,000 active listings at a given time, I think we're going to be in a good place. And if rates continue to improve, then we may really be ready for a launch board and a very, very strong year in the housing market next year. I think the biggest factor here is going to be mortgage interest rates. If mortgage interest rates dip into the fives at some point, I think we might be in for an exciting ride with regards to home values, especially by the time we hit the spring market next year. So anyway, I hope you found this information helpful. If you have any questions or you want to know more specifically what the housing market is doing in your area, please hit me up. Happy to help in any way that I can. Thank you so much and have a great day.